Good morning, everyone. Thanks, Nick. Great to be in my hometown of Adelaide. I just realised this morning, this is the first time I've actually been back and presented Chalice since our discovery in 2020. So it's been, it's great to be here. Great to see some old faces, and yeah, a wacky few days in markets. So look, I think the dust looks like it's settling. We hope, but opportunity, I guess, to learn about some very high quality companies on a day like today, including Chalice. So to get straight into it. So Chalice, as most people know, as Nick said, we're one of the leading critical minerals explorer developers in WA and in Australia. WA is the best place to do exploration, the best place to do mining anywhere in the world, and so it's a great endorsement of the geological potential and the resource potential of Australia when we can make such a large scale discovery in 2020, even after hundreds of years of exploration in this part of the world. So we own 100% of the Gonneville resource project just outside of Perth. It's a huge resource, much larger than any other PGE nickel copper resource you'll find anywhere in the Western world. It contains 17 million ounces of predominantly palladium, but a little bit of platinum and gold as well. Almost 1 million tonnes of contained nickel, 500,000 tonnes of contained copper, and almost 100,000 tonnes of contained cobalt. It is an extraordinary size resource. We've attracted already some strategic interest from the likes of Mitsubishi Corporation, so the largest of the Japanese trading houses. They specialise really in being a foundational development partner for assets like this. At the moment, it's in a non-binding MOU, but we're certainly getting lots of strategic interest in partnering with us to go and construct this operation. The upside equation as well is quite straightforward. As you can see there on the map, those orange areas are our almost 8,000 square kilometres of tenure that we own 100%. Most of that is completely unexplored when we made our discovery. So we were the first ones to really put this area on the map. Previously it was thought of all barren granite, gneissic type terrain. Now we know it's obviously very, very prospective for magmatic sulfides. We suspect it's very prospective for hydrothermal gold-copper systems as well, and that gold-copper exploration has really been our focus in the last couple of years. I'll talk about that. And importantly, when you're a junior company, having a balance sheet. So we've got 90 million Australian dollars in cash and listed investments or cash equivalents. Very, very stable, sticky institutional holders in our top 20. So we're really set up for success here. It is, of course, a very, very challenging market still for these commodities, but we're really sort of poised to capitalise on that, the situation. We've got a dedicated and highly invested team. We're all shareholders. We've obviously made this discovery back in 2020. We've really got the other part of the business now humming, the real project builders involved now as well. And really, we first and foremost, we're owners. We think like owners. We care about our shareholders and we care about creating value. And all of those things combined really make Chalice an opportunity. And it goes without saying, at the moment, you can buy Chalice for effectively less than $10 per ounce equivalent of PGEs in the ground. So PGEs are currently trading around about a 5-year low of $900 an ounce. So they're a fraction of gold. Previously, they had been trading at multiples of gold. But that is an extraordinary value proposition, and as people would have seen in the last few days, our stock has been hammered with movements in the macro and all sorts of uncertainty. You can get exposure here to a price rebound, which I'll explain. We think is just around the corner. So Tim Goyder is the major shareholder, founder of this company. He's obviously been a very, very successful entrepreneur and very big contributor to hopefully people's portfolios in this group, in the RRS group. Our stock has been under severe pressure, but like I said, it presents an opportunity. Very, very high liquidity, very good institutional shareholders, very strong cash balance, like I said. So all the ingredients there corporately to capitalise on this situation. So palladium's not a particularly familiar metal for a lot of the market. There's two charts here on this page. The blue is the palladium price in Australian dollars over the last 5 or so years, and the orange is our share price. So really, it all got very exciting in 2020. Like I said, when we made our discovery, we were about 16 cents a share. The share price capped out at about $10.60 a share, which was one of the more extraordinary runs, in the history of the ASX. And that was really because palladium was trading at extraordinarily high levels, far into what you term incentive price levels. Since unfortunately 2022, you can see that the blue palladium price there has eroded dramatically, but you can see in the last 12 months what looks like a price floor. So even with all the turmoil in the last few days, palladium has really sort of rallied. Every time it's hit about 900 US an ounce, it's rallied straight away to about 950. So it says to us that we're so far below the marginal cost of production at these levels. Really, it looks like sort of downside is somewhat constrained, and really Chalice is one of the few ways to get palladium exposure in a safe, reliable jurisdiction. It really presents an opportunity. And really palladium demand, and palladium, for those who are familiar with it, it's a function of almost exclusively used in catalytic converters. So palladium demand is a function of the number of vehicles which are produced, light vehicles and heavy vehicles, the share that have a catalytic converter, as well as how much palladium is in that vehicle. And as you see on the right there, the outlook from our perspective is very strong. The consensus here is a very, very bearish sort of perspective. We don't think that's playing out, primarily because we think hybrids are going to be the vehicle type of choice. The broader market thinks that everyone's going to move straight away to battery electric vehicles. We just don't think that's realistic outside of China. And obviously China is really the only place in the world right now where actually battery electric vehicle growth is occurring. The other interesting side to palladium is the supply side. So supply is concentrated in Russia, South Africa. These are operations that have been going for 50 plus years. They're very, very deep, in some cases more than 2.5 kilometres deep. There hasn't been anywhere near the level of investment in keeping these mines operating. So you see these very, very frequent disruptions in supply. And obviously Russia, it goes without saying, producing 45% of the world's metal. That is a huge geopolitical problem for the planet. And I'll show on the next slide, I guess one of the quirks in the supply side is, if you look at the forecasts in the dotted lines on both mine supply on the left and recycled supply on the right, what you see is every year analysts are far too optimistic about how much mine supply is coming online and how much recycling is actually happening, especially in the case on the right-hand side there. Some of the recycling forecasts you see out there are just plain ludicrous. So this market is going into a deficit, and we think it's going into a deficit in the near term. So that is why there's an opportunity here to capitalise before the price moves back into incentive price territory. So that's the market. It's obviously a fascinating market. I didn't mention nickel as well, but obviously 20% of our revenue comes from nickel, or will come from nickel. About 20% will come from copper as well. The copper, story is very, very simple. The nickel is one of opportunity, I think, as well. For those who have noticed, in the last month or so, the Indonesian government has started to realise the impact that large-scale laterite development has had on the islands of Sulawesi, and we're starting to see the government really really starting to exert its power now, given that Indonesia controls about 65% of global nickel production. So watch that space as well. So I mentioned the parameters here. This is an open cut project just outside of Perth. This is going to be a very, very competitive asset. It's going to be second quartile. We're doing work on that as part of the PFS at the moment to improve that proposition even further. We own the farmland that's going to, where this resource is and where all the infrastructure is going to go. So we own 22 square kilometres of farmland here just outside of Perth. We've got major project status, strategic project status. We've got every bit of government support that you could imagine for a project like this. And just given the scale of what we're talking about building here, it goes without saying this is one of the premier and sort of one of the key critical minerals assets in the country. The other real advantage of this project is the high grade that we get in the early years. So for those who remember the discovery, in the first sort of 200 metres below surface, there is some very, very rich high grades in this deposit. So for the first 4 to 6 years, you're going to see a very, very high grade profile, which is going to rapidly pay back that upfront capital before moving into a large scale sort of bulk type low grade operation. And really the big change lately has been a big simplification of the flow sheet, which I'll talk to. So we have done a lot of de-risking. I won't go through all these steps, but we've got a resource now that's fully drilled out. There's no more infill drilling to do. We're really in that final stages now on converging on the development case, getting our PFS completed by third quarter this year. And really we're very well advanced on the permits and the approvals, like I said, as well. So previously we had some challenges on the nickel side of our flow sheet. We will use flotation, but then we were previously contemplating a hydrometallurgical process to upgrade the nickel product. We've now been able to, just in February, we announced a breakthrough where we don't need that hydrometallurgical process anymore. So now we're back to a very, very simple, straightforward flotation concentrator, followed by a leach, a gold industry standard leach at the back end. And that's really there to capture palladium that isn't recovered through flotation. And we're still doing a little bit more test work. We are towards the end of the PFS now, but there is a little bit more upside here, we think, to chase in terms of metal recoveries, but we've done a complete redesign of this flow sheet just recently. So it is now much more simple, much more straightforward, and all proven standard technology. And the effect of that is effectively costs down way more than recoveries and payabilities are down. And that means also the margins that we expect per tonne of rock that we process, we're going to have a significantly higher margin on every tonne. And that opens up the possibility again of tackling this big sort of bulk, low-grade open pit scenario. Previously, we talked about shrinking the asset down into a smaller scale, high-grade operation. We don't need to do that anymore. Obviously, in a big bulk world, we still have that first 5 or so years of very, very high grade. And so really the margin improvement here is the story. And that's why this asset is going to sit in this position of the cost curve. So comfortably in the second quartile, we think we can produce for basically $470 US per ounce, all in sustaining cost. We think there's downward pressure on that number. We're targeting something more like 300 or something starting with a 3. And that's going to comfortably put us between Russia and South Africa. Russia on the left, South Africa on the right. And as I said, the current price is crazy low. The current price is very, very deep into the cost curve. So there is a large number of South African operations which just frankly need to be shut in. And that is going to bring the price back to sensible levels before long. Before I finish, it's something part of our portfolio that doesn't get a lot of airtime, but the level of activity we've had on an exploration perspective is something that probably no one quite appreciates. We've spent around about 20 million Australian dollars since the discovery on testing targets that are outside of the Gonneville Julimar area. So we're really now in the exciting part. We've done sort of the first pass tests for gold and copper targets. And really there's been a focus on that Barra Barra project there, which is about 300 kilometres north of our discovery. But really it is an area that we think has absolutely the right ingredients for a hydrothermal orogenic gold copper system. We've got a whole thousands of square kilometres here of previously unrecognised goldfields, greenstone geology. So it looks like another gold belt of WA, and obviously it's a huge area, as you can see there, and we're expecting assay results in the coming weeks. So that'll be a very, very exciting one to look out for. I am out of time, but just to reiterate again, we are fully funded. We've got an extraordinary balance sheet. We've got an extraordinary palladium, nickel, copper asset, and as you can see there, very active on the exploration front as well. So I'd encourage you to come and have a chat with us at the booth and and wish everyone all the best for the rest of the day.